Howdy, Jacob here. Today we're looking at Orion Group Holdings in the construction engineering industry. 332 million market cap, 327 million enterprise value. I'm going to look at their insider ownership for a company that is less than $500 million. And we see about 7% held by insiders. That's not immense, but I prefer double digit, but really 7% is not bad. That means there is a little bit of stake in the game for your CEO, CFO, board members, and everyone. So hopefully they do what's best for you as the investor because they themselves are invested in the business. So pretty wild swings of revenue growth where 3 of the last 10 years are negative, 2 of them negative double digit. And then outside of that, we have 5 years, 6 years, no, 5 years of double digit or pretty much double digit revenue growth in the positive direction. So very wild on the revenue side, gross margin 6% to a 12% and not consistent, kind of up and down like a wave. So I don't like that. I don't like how low that gross margin is. I don't like how low the operating margin is, but I definitely don't like the inconsistency and wave like margins and revenue growth. Consistent businesses are what you'd pay more for, but again, that does mean that opportunities can arise for cyclical businesses, and so we'll see if that is the case. We'll see if that's the case from my eyes. So the income statement shows, like we saw, cost of goods sold is a heavy amount. Gross margins are very dampened. Balance sheet has 31 million cash on hand with 13 million short-term debt, 24 million long-term debt. So almost enough cash for that long-term and short-term debt. So not terribly concerning from a balance sheet perspective. And on the cash flow statement, they do produce free cash flow. Let's see, 1, 2, 3, 4, 5, 6. Okay, so majority of the time they've produced positive free cash flow with a very large net acquisition in 2015. And outside of that, we don't really see forms of capital allocation. So that's not great. It just seems to be going to their cash. And again, if you're stocking up on cash, it's fine if you have something very advantageous to do with that. But if you're just sitting on cash, that's a terrible return on invested capital. It's not making any money. You want to be allocating capital most efficient as possible for your shareholders. So let's start making some assumptions. Given what I saw here, I'm not terribly impressed by the business as its whole, but that's fine. I think I'm still able to make some reasonable assumptions here. I don't think construction's going anywhere. Probably a little bit more than regular. Let's do 5%. Margins are very low. Let's do maybe 3 and 4%. It's pretty much higher than it's been. Share change, stock-based compensation is about 2 to 3 million issued. It's about 1% of their current market cap. So I think that's a reasonable assumption. Let's just do market average here. And given all of this, I think I may be a bit optimistic on the margin side personally. And then I'd really have to understand this business to see if these are reasonable assumptions elsewise, but still needing to fall 43%. So even with some assumptions that could possibly be on the more generous side, it's not looking obviously cheap to me to be doing a deeper dive on that at the moment. Hope you enjoy the video. Have a great day.